Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at our W3 or Wave 3 trade setup with a good example that's unfolding currently on the British pound US dollar. But as usual, we start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades. Right, this is the setup I want to look at on the British pound US dollar, this TS3 or W3 Wave 3 trade setup that unfolded a little while ago here. This is one we've been following in our customer training webinars for the last couple of weeks, so it's nice to see it unfolding nicely here. Just as a reminder for you guys who haven't been following MTPredictor for a while, MTPredictor is not a black box system. We don't take all our automatic setups, you can see we have on our chart, perhaps in the direction of our MTP trend color, blue for up, black for in the process of making a reversal, and red for down. As like a mechanical system, we don't do that because we understand that markets are random half the time, or maybe even slightly more than half the time. In other words, the picture's not clear. And this is what happens and why a lot of other systems fall down, is because they don't take account of that basically the markets are basically random during periods, and you just can't get any clear gauge on the large degree trend. So what we do at MTPredictor, we only look to trade when the picture's clear. So how do we do this? Well, for this we go to the higher time frame. If you're say trading a 3-minute chart, the higher time frame would be a 15-minute. If you're say trading daily stocks, the higher time frame would be a weekly. And as this is a 4-hourly chart here, you can see a 4-hourly chart of the British pound. You'd go out to the daily chart. Interesting on the daily chart, you can see we had a great support zone there at our weekly DP, but I'm just going to show you this on our daily. So what do we do on this? So I'll just go back in time a little bit. And here, what we do is we take our DP, which is our decision points, support and resistance levels of previous highs and lows. We teach which highs and lows to use in our customer training. But this is the last swing into the high, so you take DP off this level here. So right mouse click, do DP. Can you see how that gave an area of support? But more importantly, that support is on the chart before the market even got there. So you see that? So it's there ready for you in advance, preparing you in advance for a potential area of support. If I turn trading mode off, you can see this is what happened. The market came down and made a reversal right at that zone. In other words, if the market is doing what we anticipate, i.e. by our projected support and resistance levels, then we deem the picture as becoming clear. So if I now go back to our 4-hourly chart, can you see here how the market did indeed reverse off our anticipated level? So when it does that, we deem the picture goes clear. So that's where we start our Elliott wave pattern. In other words, my unique isolation approach, again, doesn't use Elliott wave 100% of the time like is taught traditionally, because I believe it falls down and breaks down so many times, as we basically start when the picture becomes clear. In other words, we use our patterns in isolation. So we draw a line in the sand here and we start our patterns here. If I use our training mode and jump back a bit to this area here, what do we have at this particular point? Well, here we had the market making a reversal. Therefore, the large degree trend was deemed up. The market then reversed off that nicely. The picture was clear. Our MTP trend turned blue. Therefore, we gauge that the large degree picture is clear, and therefore we're looking to take trades in our long direction. There was a TS1 set up here, so if I right mouse click, do analysis, you can see that would have actually taken you into a long trade. Remember, our position sizing takes care of the number of lots in this case, or shares or contracts if you're trading other markets, to keep your initial risk small and under control. As I discussed in our training webinar, at a risk reward of less than 2 at our first target, this probably wouldn't have been an ideal trade setup to take. But in a worst case scenario, if you had have taken that, that would have been a 1R loss or a losing trade. Remember, losses can and will and do unfold. But the loss would have been kept small at 1R or 1 risk unit. But this was the one I want to look at in today's webinar. So you can see here the picture's clear. Our MTP trend had gone blue. We'd reversed off our higher time frame support level. Everything was looking to be a nice, clear, clean picture. Right mouse click over the blue buy bar, do analysis, and this gave you our trade setup. Again, the position sizing took care of the number of lots to trade to keep your initial risk small and under control. In this case, less than 2% of a sample $20,000 account. You can set up different size accounts if you wish to take account of smaller accounts, as I've shown there. But let's keep this on our default account. So a W3 trade setup is a wave 3 trade setup. In other words, what we're looking to do is we're trying to catch the wave 3, which is the strongest and longest in the completed 5-wave sequence. Why is that the best one to take? Well, because it has the largest potential profit potential in relation to the initial risk or the losses when they come through. So you can see here our target would have been at the typical wave 3 WPT, because that's what we're looking to catch. And here the profit would be approximately 8.5 or just over 8.5 times the initial risk. So we're trying to catch the end of a wave 2. So what particular pattern do we like for an end of wave 2? Well, we like it to be an ABC pattern, and this is the, if I do our intermediate degree Elliott waves, you can see that's what we had here. We had an ABC into a larger degree on the higher time frame, wave 2 or B. Because this starts off a major sequence here, we then deem this to be the wave 2. But this is what we're looking to try and look for, an ABC pattern into a wave 2 low. We're then anticipating this is then going to rally in a strong wave 3. That's why when we place the analysis on, the target that we use is the typical wave 3 WPT. This is why it's one of our favourite trade setups, because of a large profit in relation to the small initial risks. If I turn training mode off, you can see that's exactly what the pound has done. It's now reached this level here where a profit of approximately 8.7 R was available. So if I now perhaps put our larger degree pivots on, this makes it just a little bit clearer for you. I'm just going to make that a little bit bigger to actually see the pattern we're looking for. So this is what we're, oh sorry, I didn't mean to do that. This is what we're looking for. We're looking for the start of a sequence at the higher time frame support. The initial move up is a wave 1. We're then looking to get an ABC correction into the wave 2. That's the most likely pattern, Elliott wave pattern in a wave 2. We're then looking to get a strong wave 3 kind of swing up. So if I right mouse click here and do Elliott wave major, you can see that's exactly what we're looking for. So we're looking to trade the wave 3, which is the strongest and longest and completed 5-wave sequence, but we're looking to come in at the end of the wave 2, which is exactly what we do here. So as you can see, this pattern here highlights it absolutely perfectly. But the trick, and this is what we do at MTPredictor, is only start our Elliott wave sequence when the picture becomes clear, and that's why I developed my unique isolation approach. In other words, we're using these Elliott wave patterns in isolation. So if I now go back and just clear that up a bit so we don't confuse things quite so much, we can then just summarize on what we have. We started off this by projecting our higher time frame support zone, and that was projected in advance. That's the important thing, as this is a leading indicator. This is on the chart in advance to prepare you in advance before the market gets to these potential support and resistance zones. If the market then makes a reversal off these, we then deem that the picture's clear. In other words, the market's not random. So in other words, we're in the half of the time when market patterns are clear. We can then start to analyze this and then look for trade setups. The market then rallied up on a wave 1. It then made an ABC correction down. Our MTP trend turned blue, and that was our trade setup. Remember, there was a potential losing trade there earlier. Losses can and will and do unfold, but the trick is keeping those losses small. Then when we came through to this W3 or wave 3 trade setup, you can see that it got us in right at the end of the wave 2 with our correct position sizing to keep our initial risk small. It then rallied up to our typical wave 3 WPT target, where here profit of approximately 8.5 times the initial risk. But that's why we like these trade setups, because the wave 3, being the strongest and longest and completed 5-wave sequence, has the largest profit potential in relation to initial risk. Remember, it's not just about the dollar profit here, it's about profit in relation to the initial risk, in other words the R number. So this is what we're looking for. We're looking for trades that have a large risk reward in relation to the initial risk or other trades that will result in losses. As I said at the start of the video, no matter what trading approach you take, there always will be losing trades. The trick is keeping the losses small and having trade setups like this that have profits that are large, not just in dollars, but in relation to the initial risk. So a great example of our W3 or wave 3 trade setup that's just been unfolding here in the 4-hourly chart of the British pound US dollar, and it's one we've been following in our customer trading training section of our for our MTPredictor customers. So a great example there of our W3 Wave 3 trade setup.